Welcome to Beers with Contractors.
Tradies, it's Will, another episode of Beers with Contractors. However, this is our new format that we're going to be presenting to you guys each week. It's called the Beers with Contractors Flight Sampler. Little nugget of things that you guys can put to practice this week in your businesses. And we are pumped to give this to you in short little doses, like short little flights. And cheers to Terry. Terry?
Cheers, Will.
For your great choice of title. So this week, I want to talk to everybody out there about one of the most important things that you need to know in your businesses, especially if you're in home services, is this little concept of break even. Most of you guys are looking at your bank statements, you're pulling up break even and thinking, all right, well, we pulled in more cash than we spent, but that's not what I'm talking about. If you want to have predictable numbers in your businesses, you need to know what break even is. And I want to break this down for you today. Break even equals your fixed expenses divided by your gross profit margin. That's simple. But is it? Whether or not you're an owner or operator or somebody like that, you got to understand what this means. So if you are doing zero work next month, what bills still have to be paid? That's what I want when I say fixed expenses. So let's take any of those, including an owner's salary, and put those in fixed expenses. If that number comes out to, $50,000, you have your number. You still got to pay the internet bill. They don't care if you're out of work. Still got to pay rent on the building. They don't care if you're out of work. Still have to pay your truck payments. They don't care if you're out of work. Any of those that still have to be paid, that's your break even fixed expenses. And then next, we're going to divide it by gross profit margin. Now, gross profit margin, I'm going to define it for you real quick. You have money that comes into the business. Any expenses directly attached to the expense of a job, those are called cost of goods sold. And that right there is your cost of goods sold minus your income equals gross profit margin. So let's run through an example. Money comes into the business. You got to pay your guys for the labor. You got to pay materials to your vendors. You have to pay sales commission if you have salespeople. Any of the burden fees on payroll, and if you rented a piece of equipment for that job, pulled a permit, pulled any engineering reports, all that gets lumped in. Whatever's left over, that's your gross profit margin. So the reason this is important, and I challenge you this week to think about this, is if you take your fixed expenses divided by gross profit margin, it will tell you the exact number that you have to hit in your business, invoicing number, before you even see a penny of profit. So I challenge you and your bookkeeping or your accountant team to drag out these numbers from your books, figure these out, because the businesses that are winning out there, they're the ones that are actually measuring this. And I will tell you, for my experience, every single manager in my company, they know what that is. I can walk up to them and say, what is our break even for the month? They get out the calculator, they know their gross profit margin, they know the fixed expenses, and they say, well, we have to hit 637,000 before you in Sydney see a penny of profit. So I challenge you this week to go look at that. Here is your flight sample for the week. And if you have questions, throw them in the comments. I want to hear them. And then that way we can help not only you, like we do all these other contracts around the country, but we want you guys to be profitable and winning. So we look forward to seeing you this Thursday on our long form podcast with me and Terry. But otherwise, cheers to you guys and enjoy your flight.